Welcome back to Everything Money.
Oh, I'm wrong.
Should I not do that voice, Paul?
No, I love it. Yeah, please do it.
Welcome to Everything Money. You are here. We are doing another blind stock analysis. We say all the time, Paul, we have to get rid of what other people are saying and look at the numbers. And why is that? When were you so drawn to looking at numbers as opposed to keeping up with the Joneses when it comes to stock buying?
Well, I always liked numbers when I was a kid. I remember liking numbers a lot and it just gravitated towards me. I looked at hype and stuff like that in the early 2000s, but then I realized, okay, and then when I heard about value investing, it clicked with me immediately. And you know, also clicked with me when you go on my Instagram and click my follow button, because I'm really trying to become food check. Why is Nicole like?
Was that the first joke you ever did on the show? I mean, it was really smooth how you
Why is Nicole laughing at that?
We're gonna pull up
because of how lame it was that we were laughing.
We're gonna pull up the data on this company. Paul's gonna see it for the first time. Mo as well. They have no clue what company this is. There's been a lot of discussion about this, Paul, of late. This particular company. People want to know your thoughts, and we're not gonna cloud those thoughts with even knowing the name.
So the idea behind this, guys, is we always talk about, if you want to take the emotion out of investing, look at companies as just a stream of cash flows. That's what they are, right? Does that mean you shouldn't care? No, of course not. There's still stories to be told about companies, right? There's still stories that if there is a good path to more growth, it still should be factored in there. But at the same time, if it comes to just taking out the growth bias in there, it allows you to sit there and say, okay, this company does what it's already done before. What would I pay for it? And that's a great way to start looking at any investment.
Turn around and take a good look. The market cap of this company is $34 billion.
Big company.
Yeah, go ahead. 34.
Oh, look at that PE, 213. It's just right in the sweet spot.
Yeah, as Mo would say. What is the PE of? So 213. I mean,
big profit margin. 77 gross margin of 77.6%. $230 million in free cash flow. Okay, so it's already selling for 150 times free cash flow. Sick.
Is that good or bad?
Well, it's not good or bad until I know what the growth of the company is, but it sounds pretty rich. Move on.
Okay, next. Let's look at the revenue growth.
By the way, just FYI for everybody, I probably would have moved on from this company already.
Tell us why.
Because it's just too expensive. I don't know what the growth rate's going to be, but what I already know, I know enough about numbers to know, for me to justify this investment, this growth rate has to be huge. And it's already a $34 billion company selling for 15 times sales. That's very, very rich. The software business, which has this kind of margin, this is probably a software company is my guess. Mm-hmm. They tend to do 6 to 8 times price to sales. And that's in an expensive market like this.
For our very new viewers and investors all over the world, Paul, can you actually rephrase everything you just said and why you can so quickly just say no to this company?
This is a software type of gross margin, which means software companies tend to have really high gross margin because their initial expense is making the software. After that, it's just printing it all out. They don't even do CDs anymore, right? It's just on the internet. So the gross margin is very, very large.
Yep.
But their price to sales ratios tend to be 6 to 8, 5 to 7. And I think that's even expensive in this market. It's not like this is a $3 billion company.
And has
a ton of growth potential. I mean, this is already a $35 billion company. I mean, is it going to become the next Microsoft? Maybe, but Microsoft does $70 billion in free cash flow. This did $230 million, so it has to grow, a quadrillion times to even get there.
Yes.
So,
okay,
and it's already downtrending. 52-week high of 89. Okay, keep going.
Let's look at the revenue, which is our pillar number 3. Paul, this is operating revenue.
Oh wow, look at that, quadrupled in the last 4 years.
So 472 million to 1.7 billion.
Net income, nice.
They're losing.
Ooh, $1.36 billion they lost. Oh, good for them. Good for them. Next.
Okay. How about shares outstanding, Paul?
Okay, not the worst, but not great. So it's going up. Go ahead. Actually, it's a lot. 33% it's up.
Not actually surprising.
Paul, by the way, the numbers are a little small here, so you have to kind of shout them out.
Okay, so 448 million shares outstanding in 2017, 596 now. That's an increase of 33%.
Oh boy, that's not good.
That's a lot.
Assets over liabilities are pillar number 6.
Current assets 2.36 billion. I bet you they have total liabilities way less than 2.36.
Let's take a look.
Yep, look at that.
Wow.
Current liabilities are 204, total liabilities. So they have a lot of cash on hand, which is good.
Nice. How about free cash flow?
What about it?
Uh-oh. It's not there. I see.
I mean, it just started recently.
So minus 144 the first year, minus 82, minus 33, and then they have positive 11 million.
Yeah, and then for the last year, it was like 100. It was like 200 million or something like that, or 100 million or something like whatever it was.
Okay.
All right, next. What's this?
Maybe it's the wrong one. And that's it. They don't have enough data for our 8 pillars, Paul. So
Okay. I'm avoiding.
Avoiding. I mean, just right.
But I mean, shares outstanding is up 33% in the last 4 years. It's selling for 2 billion times free cash flow. Doesn't like to make money.
Any
And
guesses?
it's in the software arena.
34
And it's a volatile stock too. So it's something, I don't know if volatility can help us on a quarterly basis.
Is that the chart?
Yeah, I mean, you can just, the only reason I say it's volatile is like recently they had earnings and they gap. It seems like every earnings they gap. So I'm trying to think of companies that are doing everything you just said and are volatile every single quarter.
Do the people in the Bid Nation, our Patreon tier, do they like trading a volatile stock like this?
To me, well, it's not volatile on a day-to-day. It's volatile when it comes to the earnings report. So, like on earnings, it's just going to gap down on you or gap up on you.
So it had bad earnings recently, I assume.
Yeah, it has bad earnings recently. Or it has good earnings and it just went the other way. So maybe because of forward-looking guidance.
Okay, Paul, so let's walk through the stock analyzer tool. This is a tool we provide our patrons and our software users to find what we should be paying for this company. It takes in a lot of the assumptions we should make moving forward, Paul. And maybe you can walk us through this. I mean, obviously, revenue growth is...
I got it.
You know what company it is?
Yeah.
Don't tell us, Mo.
Okay, I
Don't
won't.
you dare.
I
Don't
got
you
it.
dare.
You know it?
Yeah.
Go ahead, Paul.
All right. Do revenue growth of 25, 35, 45.
25, 35. That's pretty egregious, but okay. Paul.
I know. Do 5, 4, 3.
4, 3. They're going to...
What was their revenue? $1 billion something? Okay. Profit margin, do 8, 12, 16.
Boy, they're... Okay.
Do the same thing for free cash flow.
12 and 16, sure. PE, oh my
PE,
God.
put 15, 18, 20.
Not 210?
No. Same with free cash flow, multiple.
15, 18, and 20.
And do 15, 12 and a half, 10.
15, 12.5, and 10. Now, Paul, if I wanted to get a 10% return, I would just put it in the S&P 500, SPY, VOO, Vanguard.
Then as opposed to hoping for this.
And so like this needs to be like really slay. I mean,
Yep.
So let's analyze this. The current price of this company is 53. Let's take a look. And oh boy. So walk us through these numbers, Paul.
So if your high side assumptions, which are 45% revenue growth, what was the revenue of the company last year?
2.5 bill last year, Paul.
That would take the company to 33.7 billion in revenue in the next 7 years. If you believe that is possible and probable and everything else is right, you're getting a screaming deal of $53 to match them. So you're basically going to make 11% a year, 12% a year. Is that really worth it? To have all these major assumptions work out?
Not really probable, huh?
No. And then obviously this is saying very awful things.
Yeah.
Well,
Guys, even if the stock was selling at 10, I still probably wouldn't buy it. Maybe not true.
I mean, Mo, the funny part is it recently fell terribly and it's still overpriced. I mean,
Yeah.
what's your guess, Mo?
So I think that this company is Pinterest. And I was thinking of a company. I was thinking of a company that went gangbusters during COVID and is volatile every earnings report. And I remember Pinterest was one of these companies that got absolutely hammered during its last earnings. So am I right?
Paul, do you agree?
I have no reason. I mean, he said it. I would say I agree with him.
Mo is correct. It's Pinterest.
Wow.
Yeah. Pinterest.
Wow.
Look at him go. I mean,
Our first video, I got the stock right, and now it's been a gap since then, and now
Yeah.
Mo got this one right.
Yeah.
Good for you, Mo.
All right.
your memory is pretty good. I mean, considering you're staring at the same freaking chart every single day of your life, I don't know how you differentiate from them. But
I don't know.
yeah,
I just remember these things.
Thoughts about
I think
Pinterest moving
Nicole
forward,
texted
Paul?
him.
Yeah, I think so too. Paul, thoughts about Pinterest moving forward?
I love Pinterest, but I just,
Great product.
by the way, can I say something now? I actually have to discount all those revenue growth numbers. I don't think Pinterest is doing 45% revenue growth in the next 7 years. So avoid.
Yep.
But if Pinterest was selling for below $25 a share, I'd take a serious look at it. Because I do like Pinterest. And I think it's a great... Nicole, do you use Pinterest? Yeah, every chick in the world uses Pinterest, and it's a smart thing. I use it. Another chick in the world.
Yeah, that's right. I was going to say, yeah, for sure.
Now,
This
Seth,
chick uses
this,
it.
just real quick, this is a great company to look at, like for trading, because look at every single gap they have, they fill. This one hasn't been filled yet, but every single gap, this gap here, it fills. So this gap that it just made here, be patient with this, and I bet you that this gap will eventually fill.
And if you're wondering when that gap will fill, you can join the Bidnass Nation. It's a part of our Patreon. And Mo will tell you the dang day that he is buying or that other patrons are buying And you can follow right along if you're too busy. You can get in an employed trader series where you go on a day-to-day basis. Mo makes videos every single day for those traders. Tell them, Mo.
Every single day, employed trader series. We have 6 stocks. If you're too busy to sit at a computer all day, I record a 4 to 5 minute video. I give it to you every single day around 2 p.m. and I tell you what to do with those 6 stocks.
That is our take on Pinterest, an interesting stock, still overpriced after getting crushed.
Yeah, and it's great. And that's an example. It's a great product. Everybody uses it. I used it for our houses in Turks and things like that to come up with design ideas.
Yeah.
I love it.
We just don't love the stock at the moment. And one day it will come. We may be in love with this, but it's certainly not at the moment. So, all right, fondle the thumbs up. Join the Patreon. You could win a Tesla that we're giving away later. And that's our take. Thanks for watching.